Hey, welcome back. If you're new here, my name is Cheryl, and on this channel we talk about options trading, specifically how to trade smarter, not more. Now before we get into it, I want to be real with you for a second. If you came here looking for a hot stock tip or some indicator that prints money, this probably isn't the video for you. But if you're someone who's been trading for a while, maybe you're frustrated because you feel like you understand the concepts, but your account isn't reflecting that, this video is going to hit different. Because what I'm about to share with you isn't a strategy in the traditional sense. It's a framework, a decision-making process. And once you internalize it, the way you look at every trade will change. All right, in this video, I'm going to walk you through something that completely changed how I trade LEAPS. This is what I call the A+ LEAPS setup, when to go big and when to do absolutely nothing. This is not about trading more. This is about identifying the few moments in the market where everything aligns. And that's where real money is made. Let's get into it. I want to start with this idea. Your entire year can come down to just a handful of trades. Most traders think they need to be active, but more trades usually means more mistakes, more emotional decisions, more losses. The real edge in this market is patience, precision, waiting for the right setup, and having the discipline to do nothing until it shows up. That's where consistency comes from. Now let's quickly talk about LEAPS. LEAPS are long-term options contracts, usually 1 year or more until expiration, and they give you 3 major advantages. First, defined risk. You can only lose what you pay. Second, time. You have 12 to 18 months for your thesis to play out. And third, leverage. You control 100 shares at a fraction of the cost. But here's the part most people misunderstand. LEAPS are not passive. They still require good timing and structure. If you enter at the wrong time, you can lose money even if you're right long term. So what exactly is an A+ setup? It's not just a good chart. It's the intersection of 3 things. First, high probability technicals. The trend is clear. The entry is at value. Second, favorable options pricing. You're not overpaying for volatility. And third, disciplined execution. You waited. You're calm. You have a plan. Most traders focus on only one of these. That's why they struggle. An A+ setup is when all 3 align. Let's break down the technical side. The chart has to tell a clear story. First, trend alignment. You want the stock above the 50 EMA with higher highs and higher lows. You need the wind at your back. Second, value zone entry. This is critical. Never chase strength. Wait for price to come back to support or the 50 EMA. That's where institutions buy. And third, volume confirmation. Institutions can't hide their activity. When they buy, you'll see volume spikes at support. That's your signal that real money is stepping in. Now let's talk about the math. This is where a lot of traders get it wrong. First, IV rank. You want to buy when volatility is low. If IV rank is above 50, you're overpaying. Even if you're right on direction, you can still lose money. Second, theta decay. Always give yourself time. I typically look at 12 to 18-month contracts. You want a buffer. And third, gamma environment. This is more advanced but important. Negative gamma environments are volatile and unforgiving. Positive gamma environments are smoother. For LEAPS, smoother trends are better. The patience filter. This is one of the most important sections because this is where most trades fail. First, the patience test. Did you wait for your level or did you chase? Second, the hope test. If the trade goes against you, do you have a clear exit or are you hoping? And third, the Vegas check. Does the trade feel exciting? If it does, it's probably not an A+ setup. Real setups feel calm and almost boring. Timing and market context. Even perfect setups can fail in the wrong environment. So you have to look at context. First, Macro alignment. Are rates stabilizing? Is liquidity improving? LEAPS are long-duration trades, so macro matters. Second, event awareness. Never buy right before earnings. Volatility spikes before the event and collapses after. Wait for the uncertainty to pass. And third, market phases. The best entries happen during accumulation or early breakout. Late-stage trends carry more risk, and distribution phases are where you should avoid trading. Risk and execution. This is what keeps you in the game long-term. First, thesis-based exits. Don't use random percentages. Ask yourself, when am I wrong? Define that before entering. Second, emotional acceptance. Are you actually okay losing this money? If not, your position is too big. And third, position sizing. When everything aligns, yes, you can size up, but never so large that one trade damages your account, big enough to matter, small enough to survive. Before entering any trade, I run through this checklist. Is the stock in an uptrend? Do I see the pattern of higher highs and higher low? Am I entering at support? Is volume confirming? Is IV low? Do I have enough time? Is gamma environment favorable? Is macro aligned? Am I avoiding earnings? Is the stock in accumulation or early breakout phase? Do I have a clear exit? How should I size my position to survive if I'm wrong? If even one of these is missing, it's not an A+ setup. The bottom line. I'll leave you with this. Professionals don't trade more. They trade better. They wait, they stay patient. And when everything aligns, that's when they act with conviction. Because in this market, you don't get paid for activity. You get paid for precision. This is not financial advice. This content is for educational purposes only. Always do your own research and manage your risk. Thank you for watching, and see you in the next video.